The information and opinions expressed in this video are of a general nature and are not intended to be investment advice, research, or recommendations. Please consult your investment professional for your own circumstances. The information in this video reflects the opinions of Arca Labs and the video's participants on the date of production and are subject to change at any time without notice due to various factors. Arca Labs is separate and unaffiliated from any third parties participating in the video presentation, and Arca Labs is not responsible for any third parties' products, services, or policies. Welcome to Tokenization Talks, powered by Arca Labs. I'm Annelise Osborne with Arca Labs. We are focused on innovating responsibly. We are excited to bring you institutional thought leaders in the digital asset space. Our guest today is Greg Bell, who is head of growth for Binance. Greg, thank you so much for joining. I really appreciate it.
Of course. Thanks for having me. Excited for our conversation.
Great. Well, I would love to know how you're doing and how Binance US is doing.
Yeah, I'm doing very well, and as is Binance. We are growing, and as the lead for strategic partnerships and strategy and business development at Binance US, it's an interesting environment that I think we all find ourselves in at the moment, which is really this tale of two cities. I think if you read the headlines, there's a lot of doom and gloom out there. Yet at the same time, we're continuing to build. We're bringing new products to market, and we're seeing increased market share week after week. And so it's an exciting time, both for the industry, but also for Binance US specifically.
That's great. It's fantastic to hear positive news. I feel like there's so many negative headlines.
Yes.
Let's talk about institutional digital assets. So can you tell us a bit about the current demand that you've seen and how it's kind of changed over the years?
Well, I think the demand for institutional digital assets, it's growing. Institutions often speed up and slow down at different times. They can be very heavily engaged and then pull back. But what we've seen is constant momentum, constant engagement throughout the various cycles. So I think that's very positive. And more of the institutional investors that are out there are starting to recognize the market benefits of digital assets: diversification, low correlation with traditional asset classes, exposure to new markets and technology. And the industry has done very well in providing more of the institutional infrastructure that's needed for investors to engage. And then regulatory bodies and accounting bodies are providing more and more clarity, which is welcomed by the industry and certainly by participants. And so when I look at things such as custody solutions or fund admins or smart order routing, trading platforms like ourselves, there's more and more of these tools that are available for institutional investors to use and find the ways to express their trade ideas. And so I certainly expect that to continue. From my perspective, one of the things that really excites me at the moment is the level of partnership that we're seeing. And that's the way to really create these seamless integrated ecosystems for digital assets. And I think it's really important because it replicates a lot of the safeguards that you'll see in other asset classes. Custody is an example. There are certain investors that require segregation of duties of custody and execution. Now, maybe that's a regulatory obligation inherent to the 40 Act, for example. But we were really excited and proud back in June of last year to partner with Anchorage Bank to enable the first institutional capability for assets to be held in custody at a qualified custodian and yet access our exchange liquidity. And so that's mirroring a lot of the infrastructure that you see for stocks and bonds. And I think it's a deviation from the pre-funding model that cryptocurrencies have today. So there's a lot of integrations like that I'm really quite excited about.
That's great. And can I ask, how much of your business is institutional versus retail?
So it's a good question. It certainly varies on the cycles. But what we have are a lot of engagements from a volume perspective with high frequency trading shops, market makers, hedge funds. There's a number of different client segmentations that are being more and more involved. but it usually ends up being about a quarter of the overall business.
Is institutional.
Yes.
Okay, great.
So
And then
Binance US, of course, is both an institutional and retail platform, and so I know that's a powerful combination. I think oftentimes we get conflated with Binance.com. So Binance US was actually founded in the United States in 2019, headquartered in California, backed by some of the industry's largest VCs, so RE Ventures, Foundation, Origin Capital, VenEck, Circle Ventures. But the platform was designed for this combination of both retail and institutions, specifically adhering to U.S. regulations. So we're regulated by FinCEN. We have state licenses and under money transmission laws. And we were the first to offer zero fees on Bitcoin and ETH pairs. So we're really price leading, trying to provide just an excellent service. But we operate independently from Binance.com. We're not a subsidiary. And so what we do is license the brand and the robust technology stack. So I like to think that we are America's access point to the Binance brand. It's trusted by hundreds of millions of people globally, and it's just an incredible technology.
Well, you're licensing the brand, and then also the technology. You have similar technology, which is fantastic. So when I think of Binance, or I guess previously it was always a retail play, but I really think that pulling the retail and institutionals together, that's where the future's going, right? The whole idea of tokenization. I have questions for you later, and access to different markets and investors. I think that's interesting. So how do you see the digital asset market developing in the next few years?
Great question. There was a poll that was done by The Economist back a few months ago, or maybe even a year ago now, and it said that about 85% of investors agreed there was a need for open source digital currency as part of a diversified portfolio. So I think the open source there is a really important component because it speaks to the ability of the development of these ecosystems and the open source nature of blockchains. And so as the digital asset market is maturing, and we are still in the early stages, so there's plenty of potential for growth in the technology. I think the adoption from both a retail and institutional side will increase as regulatory clarity increases, as the infrastructure continues to develop, and as new products come to market. Really, I feel as though the product is what's going to drive the adoption. That the more we're able to, as an industry, bring products that are utilizing blockchains, which of course is this topic of tokenization, the more engagement there will be from institutions and from retail users.
Okay, can you dive a bit into tokenization and tell us kind of how it benefits investors and institutions?
Sure. Yeah. I mean, what a big word, right? Tokenization is, in my view, the process of representing a physical asset, a virtual asset, a financial instrument as a digital token on a blockchain. And this doesn't mean necessarily that it's structurally different. A bond can still be a bond, a fund can still be a fund. It's more the wrapping paper or the capsule that is now different. And this is enabling more efficient movement. It's enabling other benefits, whether that's fractional ownership or proof of ownership, greater transparency, logic-based constraints, conditional statements, reduced remittance costs, automated compliance, things like streaming money. I mean, think of how often we stream things in our life, but yet we don't stream money in the same way. And so, there's great potential of tokenization. I really think that it will provide exposure to new asset classes, existing asset classes, and really improve the trading and settlement process. But I think everybody in the industry, were they to ask themselves honestly, has the technology delivered on the promise of cheaper, faster yet? I don't think it has. I don't think it's truly materialized, but it will. And as those products come to market, the greater transparency, the reduced settlement costs, the cost efficiency, the reduced counterparty risk, I think it will be really exciting. And it's a combination of these digitally native new assets and some very traditional assets, cash, bonds, treasuries, things like what ARCA's been doing with the interval fund, the ARCA Treasury Fund. I mean, there are some amazing assets out there that on new rails will find new investor bases and new efficiencies.
So thanks for that plug. Yeah, we thought treasuries made more sense to digitize just from a holding of value perspective initially than cash. If I look at cash transfers as well, if you do Zelle or Venmo, you're really limited in the amount you can actually transfer. So then you kind of go to the good old writing a check, which is, antiquated, it seems.
Yes.
But I totally agree. I think there's a lot. It's super exciting to think of where we can go, and that we are building to get there. And then from blockchains, we started off with amazing technology, but it was slow. And the blockchains that are coming out more recently are getting faster and faster.
So this is actually one of the areas that we had in common. So prior to my engagement in cryptocurrency, my life on Wall Street, and then on the buy side, I spent a long time in fixed income, and more recently brought a asset manager, brought an interval fund to market, and so we shared that common experience.
Yes, I'm a huge believer in fixed income on chain. There a lot more is happening in Europe than the US, but that's another conversation.
Indeed.
Okay, let's go to exchanges. So how can you ensure security on exchanges? Like when we hear about hacks, they're generally exchanges based. So how do you look at security and integrity?
Yeah, I mean, every exchange, and including Binance US, we have to take security extremely seriously. And so it's largely a process of implementing multiple layers of protection to ensure that there's both safety and integrity of the markets and of the platform. If that isn't there, then the foundational building block has gone wrong. And so for us, it starts with world-class compliance program processes, cutting-edge technology, utilizing tools such as cold storage of funds, two-factor authentication, regular security audits, and then there's the organization as a whole. And we're very compliance first, and so our leadership has 30 years plus of direct SEC and DOJ experience, and they've really put us on track to become the most licensed crypto exchange in the US. And with each new state license, we go through initial and annual third-party exams and audits of our business plan, our performas, our information security programs, compliance programs, risk programs, et cetera. And that's, I think that speaks to a misnomer in the industry, in that exchanges, cryptocurrency exchanges, are believed to be unregulated, and they couldn't be further from the truth. They're heavily regulated on the state level, but there is a desire for federal regulation. But I think from speaking to the integrity and the security, platforms that are designed for institutional grade clients like ours, for hedge funds, for family offices, for algo traders, there are some core technology pieces that are needed. And so our systems process more than 1.4 million orders per second. And this is all done while maintaining compliance and security structures. We have a 99.9% uptime across our platform, both web, app, and API. So that's, I think, an important thing, that the exchange needs to be there when you need it, regardless of what the volatility is on any given day or moment. I think that's a challenge that many of industry participants have faced, where there's downtimes right when you want to buy or sell, and that erodes trust in the system.
Wow, that's fast. So, what about regulatory? You touched regulatory landscape surrounding digital assets. How do you ensure that, or how do you, I guess, handle that?
Yeah, well, I mean, America needs to lead. We need to lead in crypto. it's a cutting edge industry. We're both here in the U.S., both here in Connecticut, and the industry has such massive potential, and so it's striking that balance between innovation, consumer protection, and I think federal regulation, as I said, plays an important part in that. And so, from our perspective, we're working very closely with state and federal regulators, the industry groups, associations, both to meet the current requirements of today, and develop what those requirements will look like in the future. But there's there's a number of features as it relates to protection of clients, and making sure that there's no market manipulation or fraud. And those are very core and basic things that we're very cautious of and conscious of, and making sure that we have the right procedures in place to protect and both our systems and our technology, and ultimately our users. And so it's about real-time surveillance, monitoring for trading activities, making sure that the platform isn't being used for illicit activities, and then having the right third-party validation, SOC 2 audits and ISO audits and certifications. So all jargon aside, it's having the security program that's meeting the highest international standards, and that's where we want to be.
Great. So one thing I don't really talk about, or I generally on this podcast, is DeFi, only because I try to keep it institutional. But there's a line between just because it's institutional doesn't mean we can't touch DeFi. So though people are scared of it, I think. But I'd love to hear kind of how you're looking at that, because with Binance, there's a lot of, I feel like kind of opens up a lot in that space. So do you have any comments on DeFi and institutional digital assets?
Yes. So obviously, DeFi is a big catch-all. So there's different elements within decentralized finance that I think are more applicable to institutional investors. And certainly, it's an exciting place because it's developing so rapidly, and I think there's great potential. But as you highlighted, there's a lot of risk at the moment, whether that's smart contract vulnerabilities or liquidity risks, and I think that's had a lot of people on the sidelines from an institutional perspective as a result. But what I have seen more recently is that some of the DeFi players are creating the right on-ramps and engagement tools for institutions that have the KYC standards, that have the other safeguards that are necessary, so that institutional investors can really benefit from the market transparency and reduction in counterparty risk. Because those are the two things that I think really are quite powerful in a DeFi environment, because with an on-chain solution, the transparency is there. And so that gives a lot of trust that was so important when it was just Bitcoin. The trust was there. It's a trust solution. And now you can embed that in different financial products. And so I do think that long term, the industry will gravitate more and more in that direction. But it's still very, very early.
I look as when we start developing traditional assets on blockchain to be digital assets, I think a lot of doors will open up. And I think from there, there'll be a lot of opportunities that we don't even see today that will make themselves. If we look at the history of finance, there's new structures that continue to develop. So I'm excited for that time, but I think it's unfortunately not in the next year or two, at least from an institutional perspective.
Well, so, the product will lead, and that's where firms like yourselves are doing such a great job. It's building the product for the user base, and DeFi can be a component, can be a tool for building those products.
So what about traditional financial institutions like banks and asset managers? So how do we get them? How do they start to adopt digital assets? How do you see that kind of evolving?
Yeah, well, I mean, it's going to evolve. It's going to occur, and certainly you've seen the first movers. You've seen the venture firms. You've seen the hedge funds. You've seen the high frequency traders that have really gotten very active. And it does ebb and flow, right? There's different processes that these companies will go through as they're ensuring that their risk tolerance is there for any new technology. The due diligence is a lengthy one. And we certainly feel that with all of our partnerships, but then there's also the due diligence of the blockchain itself, right? Understanding what the piping is, and so in many ways, I almost relate it to being a car mechanic. There was a time and a place where you wanted to, you had to be a car mechanic to drive an automobile. And now, and some people still want to be. They want to open up the hood. They want to, do an oil change. They want to know how everything works. And then there are other people that just want to get in the car and go from A to B. Go pick up their groceries or their kids. And then there's some people that want to get into a Ferrari and go 100 miles an hour. And I think there's a little bit of that analogy. Getting to the place where everybody just trusts that the car is reliable enough that it's going to get you from A to B and it's not going to break down. There's a lot that everybody can do to get there. The infrastructure is developed. The blockchains themselves, the stability of the blockchains are able to ensure that you can get from one place to another. And so that's where I'm really encouraged. But banks are also subject to regulation, as are investment advisors and whatnot. So ensuring that we have the right segregation of duties and the right players that can service these clients is the first step towards that. And I think there's more and more of that that's being done. So I expect it to happen, but when is a little bit of a magic ball.
Yes, I do feel this is a year of building, right? I think a lot's going on behind the scenes. I do think banks might be a little bit slower. If you think about banks, are really just dealing with payments, but they're so highly regulated that it's difficult for them to be the innovators. Okay, all this is fantastic. So let's bring this back to Binance. So are you working on any upcoming developments? You had talked about internal building that you're doing, or new initiatives.
Yes. Well, we are constantly building. That's one of the exciting things is the prioritization in this industry. There's so much open ocean, right? Where do you direct the ship? And so, being customer centric, listening to what our customers needs are and what their wants are, and building towards that. And so there's a lot to come, some of which I can talk about, some of it I can't. But from an institutional perspective, I touched on the custody and segregation of duties. In addition to that, there's more work that we've been putting into smart order routing and making sure that the customer experience is an excellent one in terms of price execution, slippage, being able to access markets when you want to and need to, and accessing more advanced trading strategies. So I think there'll be several more partnerships that will be in the works. So certainly stay tuned on that front.
It's exciting. That's great. So, that's really, we're kind of up against time. This has been fantastic. I really appreciate it. It's great to hear how strong Binance US is and all the innovations and your growth going forward. So thank you so much for sharing your time. I really appreciate it.
Thank you. But before we end, I have to confess something to you. So I'm not your typical interviewee. In that the majority of the questions and responses we've had today were originally AI generated. And so it's a little bit of polishing from me and some caffeine for delivery. But, I think, in terms of some of the innovation, AI is an incredible tool. And so that's one where we've been looking to see how we can leverage to make sure that the communication and dialogue is there.
That's really interesting. I just joined the board of William & Mary, and there was a presentation before the board meeting about AI and ChatGPT and how the new version is so much better than the previous version that just came out, and how quickly and how strong it is, even passing standardized tests. But they were looking at it from a similar perspective, from how it helps professors, because it can help professors lesson plan, et cetera, outside of the ideas of kind of writing the students' papers, which obviously is a problem.
Well, these are these tools, right? These tools that are accessible to us to make more informed decisions, more informed investment decisions, more to optimize our time. And so to the extent that we're able to leverage these in a personal or professional capacity, I think, the world is changing rapidly, and I'm excited for where it's headed.
I agree.
Scary at times, but I'm excited.
It is, but it gives us more tools, right? It gives us tools and data to make better decisions. So, Well, thank you, Greg. Appreciate it. Have a wonderful day. And I will.
Likewise, Annelise. Thank you.
Thanks.